Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our partners at Strategas. Today, we are lucky enough to be joined by Chairman and Chief Investment Strategist Jason Trennert. Jason, how are you doing today?
I'm doing great, Ross. How are you?
I'm doing well. Thank you for asking. Obviously, I think we have to start with the conflict in Iran. It's evolving under our feet, so I won't put too fine a point on what we know so far and what could change very rapidly. But I want to get your impression of the market's reaction in the first couple of days of trading of this conflict, and in particular, the spike in yields and what that might mean for treasuries as a safe haven for all sorts of things. But this spike in yields that we've seen, alongside kind of equity market volatility and anything else you've noticed. But I really want to get your sense of yields here and what that might mean going forward.
Yeah, it's a great question, Ross. And I think they're blowing out, obviously, because people are worried that this is going to be a protracted engagement, which will blow out the budget, right? So, there's some precedent for that, obviously, so people are right to worry about it. The way I think about it, though, and this may be a conceit that I speak Trump fluently, but I think it's very doubtful there'll be a protracted engagement in Iran, and that's mainly because he's not an ideologue. He's a businessman. He's a negotiator. He goes for the W, and this is a midterm election year. So you put all those things together, I don't think it's in his personal best interest, or it's not even really in his style, in my opinion, to have a protracted engagement there. And that means that this backup in interest rates, in my opinion, may be relatively short-lived. There'll be other pressures on the long end of the curve, but I'm not so sure this will be a long-lasting one.
Yeah, that makes a lot of sense. And again, this kind of fits cleanly in a theme that you all at Strategas have been talking about for years now of deglobalization. And it's just a kind of another notch in the belt of why this is an important theme for this decade and maybe even longer. What are the winners in the equity market and then broader asset allocation framework from the persistence of the deglobalization theme?
Well, listen, I think the big asset allocation importance of deglobalization, in my opinion, is that there's going to be a big focus on hard assets as opposed to financial assets. And I spend a lot of time looking at where the money flows are going broadly from my perch at some investment committees. And you see these waves come in, whether it's China, emerging markets, whatever it might be, the flavor of the month is. And private equity has been the biggest one, I think, over the past 15 years with financial repression. But I get the sense now commodities are a new one, and hard assets and precious metals like gold. So I do think that's important. I do think at the margin you want to be a little bit cautious on the long end of the curve, as we were talking about. I do think defense stocks globally, even though they may be expensive in by historical terms, I think whether you're talking about U.S., Europe, Korea, there are a lot of opportunities there because I think a lot of countries are going to feel as if they're going to have to fight for themselves. And you can have an opinion on that, whether that's good or bad, but I think it's just the way it is. So broadly, Ross, to answer your question, hard assets, soft on the long end of the curve, industrials, specifically defense, I think are going to be winners here.
You mentioned a handful of other countries, and we've had this move over the last 12 months where international has outperformed the U.S. And I get the sense that people understand the case for international diversification, but are hesitant to dip their toe back in, given all of the head fakes over the last 15 years that has ultimately ended with the U.S. just taking the reins back. Do you get the sense that this time is a little more structural, or that there's something more behind it that can give it lasting power?
I do, but I think it makes a lot of sense for people to diversify at this point, in my opinion, Ross. As you know, you're looking at technology is 1/3 of the S&P 500, and it's a great advantage that we have, that we're so innovative, and no other country really comes close to us. So that's great. But the thing is, most people are really there. They're concentrated. And I think it makes sense to diversify the portfolios. I think international is largely another code really for more value over growth. And I think, again, just given the growth in growth, it makes sense to a leg into more value, and certainly the valuation differences abroad are meaningful. And so I think it all kind of makes sense, and I think it's a little more. This move will be a little bit more structural, simply because people again see the risks in overconcentration in the U.S. As good as the technology sector is, it's not an unknown story, and you're paying for it.
Yeah, absolutely. I mean, we've seen the risk over the last couple of months with this move in software. So, Jason, thank you so much for the time. This is always very insightful, and we will look forward to talking to you again soon.
It's my great privilege. Thanks, Ross.